Everyone, welcome back to the TraderLion podcast. I'm your host, Richard Moglen. This is brought to you by Interactive Brokers. Our guest today is Jon Brody, who is a veteran trader previously at Show and Field Securities, and he now manages money at a private firm down in Austin, Texas. Jon, thank you so much for joining us today, and welcome.
Oh, it's my pleasure. Thank you, Richard.
Yeah. What's interesting about you is you're more on the kind of intraday day trading side of things, and I haven't gotten a chance to really interview someone with your time frame before, so this should be extremely interesting. And we're going to make sure to focus on some mindset and that side of things as well, because as you said in our kind of pre-webinar chat, that's extremely important. So to kick things off, I'd love to kind of just ask you about your general background, how you first got interested in trading and all of that, and just to kind of get a sense of your background overall.
Sure. So when I was younger, I was always into games of risk and chance. Played a lot of poker when I was a child. Became a broker after college and really did not like it. Then it was not what I thought it was. It was more sales, more, I would say relationship type building, when I was more active into wanting to learn how to trade. So there was a place hiring based out of New York, Schoenfeld Securities, that was owned by Steven Schoenfeld, who is a pretty big player in the industry. And they opened the office about maybe a year earlier in Boca Raton. And I decided, to give it a chance. So I went in for the interview and fell in love immediately with the job. And that was 28 years ago. And basically that's been trading ever since. I haven't had a break since, and love every day. And to me, I'll do it until I can't push the keys anymore.
Yeah, awesome. And kind of tell me a little bit about your journey. Obviously, you started that job. How did you go about learning how to trade, and what were some kind of resources that helped you along the way?
Sure. So I had a mentor. He's no longer with us. He passed away many years ago, but he was a very smart, savvy guy. And he taught me really the ins and outs of trading. And with his tutelage and me also learning, kind of putting my own personal stamp on it, I was able to kind of build my own system how I would trade. Now, my trading is short-term by duration. It's changed over the years. At first, it was strictly intraday. Then it was maybe hold for one night, and then get out the next day. Now I have positions that I hold for weeks at a time, but the bulk of my trades are probably within hours to a couple of days. That's really the gist of all my trading is. I'm sorry.
Yeah, I'll let you finish.
Okay. So after that, I just, I stayed there and had some bumps. I mean, I had to redefine myself over time. What worked in 2000 didn't work in 2010, and what worked in 2010 didn't work in 2016, and so on. And you have to really adjust your trading, which I had to do a couple of times from having, sizable drawdowns on two occasions.
Yeah, perfect. And talk to me a little bit more about those bumps, because I'm sure, as every trader knows, you go through ups and downs, times where you're trading well, trading poorly. So what were some early mistakes you made, and talk to me about how you recovered from those mistakes and those drawdowns as well.
Well, I think the biggest mistake is hubris. A trader starts to make money, a young trader. I made, pretty good money when I was before 30. And immediately I was thinking to myself that I was going to own the world. Right. I was going to buy a plane. I was going to buy a boat. I was going to do all these things. And within 3 years, I was scratching my head saying, do I even know what I'm doing? That's a huge issue, especially for young traders. Because once you make that first money, you think it's always going to come in, but the market changes. It's dynamic. It doesn't stay the same. So for me, what happened was the first time around, I would say I got very cocky. I thought I'd redeveloped the wheel. I thought I changed the way trading was going to be, right, and I paid for it. The second time around, it happened to me twice. The second time around, which was in the mid 2000, in the teens, like 2016, 17 area, when volatility got sucked out of the market, it was more of a swing trader's market. It was more of a, buy and hold. You could walk away from your desk and come back in a week. And that's probably the best way to trade. I wasn't adjusting to that. I was still trading as if the volatility index was 25. Right. And I chopped myself up, and I, again, had to redesign my trading. So I would say those are two of the kind of the bigger bumps that I had in my career. But both times I learned, one, how to make a change. And the second thing that I learned is that you have to always be ready to understand that what works today may not work tomorrow. Now, I'm not saying a complete overhaul of your trading. You don't need to do that. If you have solid foundations, all you need to do is kind of fine tune the TV set. When, back in the day, we used to have little knobs in the TVs, you have to tune it in. It's kind of like that. You just kind of have to fine tune it into that environment.
Right.
And that's what I learned. And it took me 20 years, even being profitable. Every day I come in here to this day, and I'm learning. I'm always learning. I'm always open to learn. I'm always communicating with other traders. That's important.
Yeah, absolutely. And touching more on the mental side of things, is there any kind of routine or habit that you do to kind of stay in touch with how you're feeling emotionally, and keep in touch with how you're performing as well? Do you do any journaling? Do you do any yoga? What kind of things do you do to make
Well,
sure that you're in touch with all that?
well, yoga, I'm not the most flexible guy, so that's out. But I will say that journaling I have done. I'm not the best journaler. I'm going to be completely honest. It is a very important tool, and if you're a trader, you probably should do it. Me, I'm the way my mind works. I kind of remember a lot of things,
Yeah.
so I do write stuff down on my papers and whatnot, as you see here, and go in that direction. But what is important is the mindset.
Right.
Like, I will know, kind of just from years of doing this, when my mind is in a dangerous place. And when I say that, is it used to be I just overtrade,
Yeah.
but now it's kind of like that uneasy feeling where you're not 100% sure if you like the position. You're not 1,000, and you start kind of getting those creeping doubts in there, and that will kill traders P&L faster than anything, because now all of a sudden you're making trades that really aren't your confident trades. You're kind of wavering on them.
They're
When
not
I
in your
get that
system.
feel, right, and when I get that feeling, I usually step away. 30 minutes, 45 minutes, just to get away and clear my head, and to see things fresh, sit back down again. I think it's sometimes, I mean, in the 28 years I've traded, I can maybe count on my hands how many days I've actually missed not trading. I mean, I'm maybe 10. So you're talking about what, 240 trading days, 250, I mean, a lot of trading days, I mean, 7,000 trading days. So for me, to walk away is important, because it gives you clarity. And and for me, it's kind of like a feeling that I get. It's just an uneasy feeling. And everybody has it. Everybody has these little things that go through them, that maybe they're not on their game, maybe they're a little tilted. Having a poker background, I see a lot of poker players, and I haven't played as much as I used to, but I used to play a lot. And what you see players that basically just tilt their whole stack away, or they just give their money away. In their mind, they think they're playing a poker. I mean, you're sitting at the table and see that they're playing horribly.
Right.
They don't see that. Well, it's the same thing for trading. You think you're trading well, but you're not, and your P&L will start to show it.
Yeah. And we were talking a little bit before about, you can trade in a million different ways, but it comes down to, mindset, dealing with adversity, risk management, all those things. What are some important lessons or keys that new traders need to learn about mindset and trading psychology, that will allow them to, unlock and trade to their fullest potential?
Well, I think the first thing they need to do is, like we just discussed, is be confident in what they're doing.
Right.
Any bit of creeping doubt is gonna cause them to trade inefficiently. They're not going to hold long enough to make a big enough winner. They're gonna or hold too long,
Right.
and they're gonna be scared to get out, because then they're gonna miss the turn, and they're gonna take a kind of a moderate sized loss into a giant, huge hit. A lot of new traders do that. A lot of new traders also, I think, they tend to put on a lot of mediocre trades, just to trade. Maybe they overtrade a little bit. Some are scared to trade. Some don't. It has to be a perfect scenario. They won't press the button. There's got to be a happy medium. There's got to be a place where you're able to be aggressive enough to earn money, but you also got to be able to step back and say, listen, I'm wrong. They have to admit they're wrong. The ego's got to go. And the crazy thing about this job is that it will fill, if you're good and you start making money, it will fill your ego to the size of like a water tank. Right. You can't let that happen. You have to be able to say, listen, I'm only as good as this last trade. The next trade, everything goes south. So I need to stay focused. I need to stay on target. And I need to be able to understand that if I'm wrong, admit I'm wrong. go on to the next trade. Don't let this trade sink my next 7. Because if you're stuck in one bad trade, it's not just a trade that's costing you. The opportunity costs the 7 next trades that you missed or you didn't trade properly because you're still worried about that one trade you're getting killed in.
Right.
That's important.
Yeah, I think that's wonderfully put. And yeah, I had a previous conversation with Larry Williams, and he was talking about how he always expects his next trade to be a loser, even if he's been on a win streak and his statistics say it could be a winner. And that mindset allows him to put his leave his ego at the door a little bit and check it a little bit and concentrate on just executing as well as he can do.
Exactly. That's hugely important.
Yeah.
And I would say, for newer traders, that's a must.
Yeah.
Like they have to also be able to not freewheel it. They have to have a frame. If you like XYZ and XYZ you want to buy at 125, okay, and you want to sell it at 128, and the stock goes to 126, you're not selling it. Your target's 128. Stay with it. I mean, if news comes out, then fine. But if nothing fundamentally changes, stay with it. New traders have a hard time actually agreeing to the rules that they set for themselves, because listen, no matter how much you try, emotion creeps into this job.
Yeah.
Making money is emotional. People, that's why when you see a person go to the casino and hit a jackpot, they're jumping up and down, or they go to the track and they hit the long shot, they're going crazy. Same, because emotion is involved. You have to be able to put that emotion aside while you're in front of the keyboard and just basically treat it as if it's just your computer.
Yeah. And would you, kind of along those lines, would you recommend for new traders to actually go out and type up or write up a concrete set of trading rules that they should?
1,000%.
Yeah.
And not only that, but they should post it around the computer.
Yeah.
So I used to see traders do this, and I think it's fantastic. They get post-it notes. Hold my targets, don't overtrade. Yeah. Listen to the inner thoughts of my mind. All this stuff all over their monitors. I have 8 monitors, so that's a lot of post-its. But the point is that yes, this way the messages subliminally and subconsciously are staring at them, and they're getting that reinforcement over and over again. And I'm going to tell you what, that works. Yeah. It's just like reading. Just like if you're playing the guitar. Okay, I like to play the guitar. You play the same song 1,000 times, it becomes like second nature. You start being able to do it without having to look at the chords or listen to someone play it. You just know it by heart, and that's really what happens with these notes. I think that's a fantastic idea. I think every new trader should do that.
Yeah, and just curious, what is the trading rule that has saved you the most money over the course of your career?
Okay, so I actually just implemented this like 3 years ago, because for me, I am not, so my weaknesses in trading and my strengths are a little different than others. My strengths are that I can turn it on. Like when I get going and I can turn it on, I really am aggressive and know when things are good, when I'm seeing the ball. And so I'm able to really capitalize on winning stretches. My weakness though, is that I have a hard time shifting out of that gear to going back to kind of grinding. Mm-hmm. And what happens is that, so this is a perfect example of the market we're in now. Okay. We went down for a while. So when the market goes lower, for me, I think it's a very big money making opportunity, because I can make money long and I can make money short. So as volatility increases, my profit potential increases exponentially. Mm-hmm. When the volatility index is low, I like to use the VIX as my indicator. When the volatility index is low, I'm able to grind and make money slowly. But when the volatility index is high and then goes to low, I always get caught in fifth gear. Always. I always get caught too fast, too speedy, and I always give back I would say a piece of my gains. So what did I do? The first thing I did was, if I have a day that I lose X amount of money, I am flat overnight. I take nothing. I start the next day over again. And every time I've broken that rule, I've lost at least 5 days in a row. Every time. Not like sometimes, not like 80% of the time, 100% of the time that I have had a losing day that was very big. And usually it comes from a day that I'm up on the day and then finish at my lows. Right. I have gone on a losing streak every time in 30 years. So I took that away. And just by taking that away over the last few years, my trading has gotten so much better and so much more profitable, just by that one rule. So everybody can have that one rule that will save them, that can really, save all the agony and anguish that I had to go through to realize it, and be able to increase their P&L. And let me tell you something, even if it's only $1,000 or $2,000 a day, over a year, it's $500,000.
Right.
It's a lot of money.
Yeah. And it sounds like in order to find that weakness and that kind of pattern that you identified and fixed with that rule, you had to go back and study your trades and do some post analysis. So
1,000%. There was a time period, I think it was in 2016 and 17, where I literally won 3 months out of 15. I had 3 winning months out of 15, and I was up 12 of the 15 months.
Wow.
So at the end of each month, I lost back all my gains, and I was wondering, what am I doing? And I literally built spreadsheets and models, and I built some tickers for some filtering software that I use. And I went through all my trades, and I realized what was happening, that every time I've had this, like I'd be up that month, then all of a sudden I'd lose at the end of the month. Why? Because I'd have one day that cost me, and then all of a sudden the rest of the month I get destroyed. And this was happening every month. I was, 3 of 15 I made. That's crazy. So, I mean, it was like, almost like I was like, do I even know what I'm doing? So after that, that really opened my eyes, but I wouldn't have found it unless, like you said, unless I actually printed out and looked at from a standpoint that was away from the monitors on a Sunday, let's say when the market's closed, where I actually have time to focus and see what I was doing. And it was amazing.
Yeah.
It's helped me. I mean, it's literally changed my trading again.
Yeah, that's awesome. And this is a question I always like to ask people, ask different traders. How do you personally define risk? And also, what steps do you take to manage risk?
Okay, so the first thing I want to clarify to anybody watching this, that your job as a trader or money manager is to manage the money, is to manage the risk. Everything else is secondary. Everything, any trader that does not manage the risk first and foremost, to me, is not worth the salt as trading. Shouldn't even be a trader. The risk, that's your job, risk management. You need to be able, I mean, you can extract money 1,000 different ways, but if your risk management and risk parameters are off and you can't do that job, then you'll never be profitable. It is what it is. Now, what I usually frame my trades and risk it X amount. I usually do this X amount of dollars per trade, especially for stocks. So if I like a stock, and I'm going to throw, these are completely arbitrary numbers, and I want to risk 20,000 per trade, then I will put a trade on and you buy X amount of shares. So let's say the stock is $200, right? So I will buy 1,000 shares of stock, 10,000 shares of stock, and it's what, $2, right? So if I lose $2, I lose 20 grand. That's my stop out. 198 was my stop. Okay. But personally, that sometimes changes with how the market is. So that's my standard go-to in stocks. But when the market becomes speedy and fast, like high volatility, I maybe start to trade futures instead. And so I'll trade stocks less, and I'll manage the risk through my futures. So what I'll do is I'll have some, maybe if I have some stocks on, maybe short some futures against it, kind of as a hedge against it. Give myself this way, if the market overnight falls apart, I have some future short to cover my stocks if they don't open well. I'll use those techniques. I just started using options recently. I'm not the biggest options trader, even though it's very important in this day and age. I don't use them that much. So.
Yeah, perfect. And just to kind of give people a sense of your overall time frame, you touched on it a little bit, but could you kind of describe your overall style, how you would describe yourself, and also maybe give, if you've got them kind of an average gain, average loss, batting average, that type of thing, win rate, those statistics if you have them handy.
Sure. So my win rate's 50%. So I win 50% of the time. If I win 50% of the time, I make a lot of money. It's that simple. If I win 48% of the time, I'll make some money. If I will never win 65% of the time. I'm not the type of trader. That's not my mantra. That's not the way I trade. I have friends of mine that win 90% of the time. And when they lose, they get destroyed. Okay. I win 50% of the time. But if my average gain is $4 and my average loss is 270, well, guess what? Over a ton of trades, I'm making a lot of money. You don't have to have a high win percentage. You just have to have a bigger win than loss.
Yeah.
So my wins and losses, my wins usually are close to, I would say 3-2, 50% higher than my losses when I trade well. That is really how so if I put a stop in, let's say, and I lose, if I say, okay, I'm only going to risk $25,000 in natural gas. Okay. But so at least 25, I get out, but I can make 60 on it. And I win once, but lose twice. I'm still making money.
Right.
As crazy as that sounds, I'm still making 60, losing, I'm still netting 10. So my money management skills, so to speak, come in the rate, the size of wins versus losses.
Right.
My wins better be bigger than my losses, and by a somewhat decent amount. And I think if you time in properly, that is very attainable, extremely. I'm a momentum trader, right? So all my trades aren't going to be winners. Like mean reversion traders are a little different, because mean reversion traders, they'll buy, they'll either buy a big drop or short a big rally, and it's usually some mathematical equation outside of a Bollinger Band or overextended by X, whatever it might be. So when they win, they'll win most of the time, because most of the time they're going to be right. But when they lose, they're going to get pounded, because what's going to happen is they're going to get caught in that, and it doesn't happen often, but it happens. That's why they have that 90% win rate. So for me, being a momentum trader, I may have 10 stocks on at once or 12 stocks on at once. Okay. Some might work, some might not. The ones that don't, I cut loose. The ones that do, I let ride. And that's really it.
Yeah, fantastic. And I think coming in as a new trader, there's often this, uh, you know, uh, people think that to be a successful trader, you have to win 90, 95% of the time.
You
But really,
don't.
as you said, it's all about having those average gains be a multiple of your average loss. And yeah, and then a 50% batting average, you can do fantastic. So I think that's great.
Fantastic. My
Yeah.
biggest year is 51.49. My biggest years. And we're talking 8 figures. 51.49.
Right.
51%. That's nothing. It's like baseball. A guy gets on base a third of the time. He's a great hitter. Right? He bets 333. He's in the Hall of Fame. It's the same thing. I mean, you don't have to have that win rate. You just have to make sure that your winners are higher than your losses.
Absolutely. And another topic that I love to ask people about is kind of routines, because I think that's kind of the process that sets people apart. So first of all, talking about kind of a weekend routine or something that you do to set yourself up for success the next week. What's kind of your process for analyzing the market, if that's involved in how you trade, finding ideas, stock selection, managing risk, all of that. What do you kind of do on a week to week basis?
Okay, so for me, in the morning, I usually work out in the morning early. Then I'll get up and I will go to my machine. I'm not particularly that early. It's around usually 8 o'clock Eastern time zone. I will look at some news. I will talk to some other traders that I trade with once in a while, that I talk to, that we swap ideas with. But normally I have some overnights, so I'm kind of looking at how they're acting versus how the market's acting. If they have any news, how they're acting, if the market's gapping up, the market's gapping lower, how my target's exactly what I'm looking to get out of them. So that's really what my morning consists of. My morning's really consisting of prepping for, if I have overnights, how to exit them, when to exit them, and whatever new trades that in the morning. If it's earnings, I look at the earnings and see, how they're acting on the news, how they're, if the stock had horrible news, but yet it's not going down, maybe a buy for me, maybe it's hit a bottom. I'll look to buy that, especially if it goes green. If it opens red and goes green, I'll look to trade that on earnings. For the most part, I will be active until about 11:15.
Mm-hmm.
At 11:15, 11:30, I slow down, because over time, and I'm talking 3 decades, I lose money in the middle of the day. I just do. Counter trend rallies, garbage moves, no volume, things that, basically you think all of a sudden you get chopped up. It's just, to me, it's a horrible time to trade. There are exceptions during crazy volatile times, but for the most part, the middle of the day stinks. Then in the afternoon at about 1:30, I would say I would start prepping for, if I'm flat or if I have positions on, prepping for my overnights. And I'll start building into positions that I want to take overnight. Long, short, doesn't matter the position. It's basically based on, again, relative strength, how it's acting momentum wise. Is it an uptrend? If it is, and it's breaking out, then maybe I'll take it long. If it's breaking down, has group support, maybe I'll take it short. has to have volume. Volume's critical for me to take an overnight. And then I will trade those into the close. And at the close, I'll decide whether or not they're worthy to take. If they are, I'll take them. If not, I'll pitch them. From 4 to 5, I'll watch the futures market, see how they trade, put on any trades that I think are possibly either the futures are running out of whack to where they should be, in my opinion. Maybe I'll short them or go the other way, or maybe I think that there's some momentum going into the next day, so maybe I'll buy them. That night, I will still watch the futures market. So really, I mean, I don't stare in front of the computer, but I will check all the time until I go to sleep, which is probably around 11, 12 o'clock. I don't sleep very often. Times that when the market is super volatile, I'll probably get up to 3 to check the Europe opens, 2 to 3 o'clock, see how they trade then. That's basically my day. On the weekends, I will turn around Friday, again, stay here till 5, see how the futures markets close. And then on Sunday, before they open, I will go through my Bloomberg and go through some other stuff on the futures to see how they open, and the week starts again.
Fantastic. Yeah, very thorough.
Yeah, I think it's important to be able to have some sort of routine. My routine doesn't work for a lot of people, but then again, other people's routine doesn't work for me. It's all really personal. Trading is a very personal thing. Like people, people always say to me, well, why don't you, I remember when I was going through a tough stretch, and I had a friend of mine who I traded with for many years. I actually taught him how to trade, and he was a fantastic trader. He worked at Schoenfeld. And my wife would say to me, just copy him. I'm like, doesn't work that way. Like what works for him doesn't work for me, even though we're trading the same things. Right. It's very personal. Your routine and your technique has to fit you. You can take it from somebody else, but you better put your special seasoned salt on it to make it your own, or it's not going to work. So that's what I did.
Absolutely. And coming back to some of those rough patches that you've experienced, can you kind of talk through some stories, maybe some biggest one-day loss or something, and kind of how you dealt with that and
okay, so
eventually recovered?
Okay, so let me clarify something. I am kind of unique in a certain way, all right? And when I get complacent, when I was younger, I wouldn't say that now, but when I was complacent, I got sloppy. And the only time that I really would do really super well was when my back was against the wall. And I've had a couple situations where that was the case in my life, where I basically had to pull it together or be out of the business, and was able to do it. Mm-hmm. My biggest one-day loss still to this day is during the internet bubble. I think it was 2001. I know it was actually the end of the first quarter. So it was end of March 2001. And the market was a screaming short overnight. We thought, NASDAQ was like, what, 1,200? I don't even know what that was. I don't even know where it was, to be honest, but it was very low. That was 20 years ago now. And had some overnights, probably about 30, 25 million overnight of internet stocks short. And Dell came out and they upped their guidance. And I was down for me, it was down like 1.1, I think. That was my worst day, 1.1 million. And then remember, I'm not a portfolio manager. For a short-term trader, that's pretty big, My biggest gain is like 1.4, similar during the financial crisis. I was short the night of Bear Stearns. I got bought out at 2. I was short that night. So I kind of had a very profitable day there. But those are outliers. That's not actually, they're fun stories to talk about, like crazy. Oh, I came in, I was short Bear Stearns, and I opened at 2. You know what I'm saying? I mean, those are fun to talk about, but the truth is that those all get canceled out, kind of. You know what I'm saying? Like everything in the middle, all the little days that you don't see. That's what really makes the P&L for a trader, right. I think.
Perfect. And now I kind of like to dive a little bit deeper into your style and also how you interpret charts and technical analysis. So I don't know if to start things off, we just want to share a chart and kind of talk through what you've got on your screens. Why?
Yeah. So I want to share a couple of trades I did today.
Sure.
Now I wasn't so active today, but there are a couple of things that kind of stuck out to me that I kind of find interesting. Mm-hmm. Okay. So I put some starter positions on today in these. And I'm going to try to trade around them over the next week or so if they work out, I would say. That's the daily chart of Bitcoin. Okay, I think you say so. This is a 20-day, which it really hasn't traded over since early April, and it's almost looks like it's breaking this kind of this whole channel area and trying to get into the gap. I put a starter position on here, and the good thing about this trade, in my opinion, I do it through Bitcoin futures. It's just easier for me, but it's basically the same thing. And the good thing about this here is that my stop's pretty tight. I mean, if it breaks back under like 19 and a quarter, like and fails here, I'm out. So I'm only risking what, 70 cents on this trade, but the upside's like $2.50. So remember we were talking about before about risk reward. Well, here's a perfect example. This might work. This might not work. If it works, I'm gonna get paid. If it doesn't work, I'm gonna lose minimal. So that's one trade that I kind of started today that I find interesting. This is natural gas's chart. Okay. This to me is very extremely interesting. Now, first of all, this is probably one of the hardest vehicles to trade, and you probably have to have some sort of screw loose to even trade it, but I kind of do, so it's fine. What I do here is, so this has been kind of an uptrend since March, if you think about it, right? With the Ukraine and Russia and all that. It's finally starting to kind of show cracks here a little bit. I mean, not so crazily, but it did close below its moving average here, which it had the 20, which it has not done in, I mean, it had a 1 day here spike down, but other than that, it's been kind of holding it since early March. And at the same time, it took out this last low when it had that big volume day. See, a couple of days ago, it had that big volume day. Traded 940, closed at around 8 and change, was down the next day, rallied back a little bit, and now filled back that shadow. Now it's starting to close by basically by its low.
Right.
This to me could be a short. Now my stop here, now again, you got to be kind of wide because it's very volatile. All right. So you really can't be that size in this. But here, I like to have my stop at around 855. That's kind of what the pivot where it made. If you look at today's chart, it kind of went up to around this area. That's 859-ish area. So let's say call it 860. I can use as my stop, right? So I'm risking about 35 cents. So I think it's 820, 815 to close that. So I'm risking 35 cents, 45 cents. But if I'm right, we're talking probably back down here again, which is 720. So again, it's a 2-for-1, a little more. All right. And since this moves so wildly, you can actually, if you catch it properly and trade the waves in it, you can actually, on that way down $1, unless it happens immediately, you can make the same trade 4 or 5 times and capitalize in it. Right. You just can't chase this one. So this is something I also took overnight. Another thing I took overnight tonight is crude. Now, if you look at crude oil today, it massive volume, made a new high for the contract and failed. Right. Okay, there was some news with OPEC and Russia, but to me, crude has a very, if you look at these past times that it's failed, right, it's started kind of a move down. And crude has a habit of doing that. I've been trading it for 20 years. So to me, this is a decent short down back to 112. Again, my stop is above this last high. So it closed at where? It was 114. It closed at 115.26 was after hours. So 114.70. But like if this goes back above 117-ish, then to me, it's zero. It's nothing. I'm gonna stop showing that because that's really kind of all I did. Oh, a couple more things. The NASDAQ and the S&P, I think could have an update tomorrow. I'm long, very small. The reason why is, again, if you look, it kind of, I can't draw a trend line on this. So let me try to use the SPYs. It makes it easier. Okay, so this is SPYs, okay? So if I look at this here, my SPY chart. Now let me preface something. I think this is a bear market rally. I think we're in the midst of a bear market rally, which, by the way, can last weeks. It can last 2-3 weeks. It can chop around. My personal opinion is it makes its way to its 50-day moving average on the SPYs, which is 425.90. By what I look at, this is basically the trend line. Let me try to draw this. The trend line that it kind of broke the other day. To me, that's the path of least resistance. I think we're in a counter trend rally. I think it's along the Qs, same thing. This is the 20-day moving average in the Qs. Here's your downtrend line from the last downtrend. And now we're breaking above it, right? Today looks like, to me, looks like a rest day. Now, this is something I kind of realized that when I was struggling in that time period, 2016, 17, What was also happening to me was that because I'm a short-term trader, I would take positions overnight, and the next day they would be down and I would lose. And then 3 days later, they'd be up 20% and I wasn't in it anymore. So what I realized is, especially now, is that when I first started trading, I'd say the first 10 years, stocks kind of followed through pretty, if they followed through, they were up the next day.
Right.
You didn't have to wait. The lower the when volatility shrinks, okay, stocks have a tendency to have a rest day. They kind of rest. You know what I'm saying? So I think the NASDAQ, you can kind of do the same thing. The NASDAQ was up 3 days in a row. Today was the end of the month after having a 3-day up run up, little MSCI rebalancing at the end, which maybe had something to do with it, maybe didn't. But the point is that I think this is a long. Your stop obviously is right under in the Qs. If you're long, is it? I would say under 301, 300 area. I think your target's probably around 325. So there's that risk reward. Again, we're risking 7. We're trying to gain 16 and a half to lose 7. Again, over 2 to 1. To me, the NASDAQ's a long tonight going into the first of the month, even though just because of the trend break. So in retrospect, in short, I would say the risk assets to me are in the midst of a bounce. Bitcoin, now natural gas, if you think about it, was kind of counter trend, right?
Right.
So would maybe that's why it's kind of selling off some, while the broader markets are kind of, grinding higher here. And that's kind of what I'm looking at.
Yeah.
Plus, now you have CRM reported they're up after hours as well.
Yeah. Yeah. Perfect. And one of the first questions I had is, because I know people will ask this in the comments, is looking at your charts, what are some of the moving averages you're using? What are some of the indicators you look at on a day-to-day basis? So if you could just kind of talk through your charts a little bit, that'd be very helpful.
Sure. So first thing I usually look at a 2-day 5-minute for intraday. I also look at a 5-day 15, and I also look at this is a 10-day. This is an hourly, but I don't use it as much as I should, and I look at dailies. Right, this is what I look at for intraday trading. I usually look at my 2-day 5-minute. I look at VWAP on a 2-day 5-minute for pullback. So if a stock is strong the day before and it's pulling back in the morning, it's probably going to pull back to 2-day VWAP. And then I would look to, maybe use that either as my stop, maybe a little bit below it as a stop, or a place even to enter if I'm not in it already. I'll look at that. A little special secret I like to call it. It's not really a secret, but it's something that is pretty, I would say it's pretty accurate, is that in markets that are super volatile, or even markets that aren't volatile, the further away the Q or SPY gets from the 2-day, 5-minute, 50-day moving average, the more chance it has to have a counter trend rally or sell off. What I mean by that, so let's say the VIX is 30, it's 26 right now. Let's say it's 30, okay? And the SPY chart, the SPYs are trading $7 above the 50-day on a 2-day 5-minute. So the 2-day 5-minute is trading at 406. This is all hypothetical numbers, and we're trading at 413, and the VIX is like 25. I'd say. I think a sell-off is imminent. We're too stretched. That's kind of has a little mean reversion taste to it, so to speak.
Right.
That's about when the only time I really use it. The higher the VIX is, the more stretched that can be. So in a 35 VIX, that $7 may not be so much, but in a 25 VIX, it's pretty substantial. And over time, I was able to kind of figure out, just by, I guess I would say, trial and error. I would like to one day mathematically get equations for it, but just in my head. So I just kind of use it that way. Kind of give me ideas of when the market can maybe either find a bottom or find a top, just for a short-term fade. I use that for that. That's kind of for that. But for my momentum trades on a daily chart, I like stocks. I normally like stocks that are, let me try to find something here. This is my best trade today. I bought Amazon this morning. Okay. So let's look at Amazon today. This was one of the few trades that actually made money. I didn't trade very much today. So Amazon, the market was selling off. So this is right. So we have Amazon here, gaps up 23.27, goes up to 23.69. Okay. Meanwhile, the market's going, these Qs are going straight down.
Right.
Okay. Now, I don't hold so much stock into that like I used to, but Amazon's a market stock. Like Amazon should go down when the Qs go down. Okay. It's not like, Datadog that may or may not. And this is a bellwether that will move with the NASDAQ. This stock was not selling off today. Wasn't selling off. And if you look, right, so I showed you that and I showed you the Qs, right? I mean, Qs going straight down here and Amazon basically going up and then coming in a little bit. Then it kind of formed a little low and then regained it. And as soon as the Qs even started turning a little bit this morning, right? What happens? Amazon, with volume, by the way, nevertheless, starts to march up and basically is up $100 for the day, sells off at the end of the day. But I think it might have been an imbalance there. But for the most part, with good volume, 1.26, which for that stock is pretty good. So that's a textbook long for me. That's a textbook trade for me to get into, Amazon. It's funny, if you look at the Qs. Now, remember we talked about another moving average I like to look at is this is a 200 on a 2-day 5-minute. Now, a lot of times the things are stretched, like the Qs had a 3-day winning streak. This came right back down to this area here. Look, see, this is still holding an uptrend. If this would have broke down underneath here and started kind of breaking down, I wouldn't be thinking that we're going to go higher, but this held this 2-day area. This still held it. So to me, this is just kind of a rest day, a day they were in the market kind of took a breather from how strong it's been. This is the SPYs again, basically the same thing, came down right to the 200-day on the 2-day 5-minute and kind of just kept bounced there, and now kind of closed in that area. The only one that didn't was the IWM today. And the reason why the IWM, I think, had a little more trouble is because I think you had a reversal in energy, right? Crude was up this morning, reversed at the end of the day. Gas was down. A lot of the stocks are in the Russell. So I think the Russell had a little more pressure on it because and also retail was kind of weak as well. So that's why I think you had a little more pressure on IWM today. But it still looks to me constructive to be long, at least for the foreseeable future. And for me, that could be a day or two, just so we can understand each other. I'm not talking about go in, tell your aunt and uncle to go buy the stocks and hold, I'm not saying any of that. I'm a trader. That's what I do. I'm telling you my trading, what I see.
Yep. And just for everybody watching, we're recording this on Tuesday night, and it'll probably be out either tomorrow, Wednesday, or Thursday. And obviously, John, you're going to manage your risk pretty tightly if things.
Yeah. So right. So here's the thing.
Yeah.
So my short position in crude oil, I have a stop in at 118.30. That's my stop out. Okay, that's my knockout price. I'm looking to buy down to the 111s. I'm short from 15.5 area, I think. So I'm looking to buy down to the 111s, piecing out of it. For gas, my stop's 860. I showed that stop area before, and I'm looking to cover down to 780 area, taking maybe a quarter of the position off every 12 cents. And kind of trying to get out that way since it's so volatile. If I get up in the position, you got to kind of take some off. Bitcoin here, look at the volume I had put on today. You can see this chart. This has got pretty big volume, a lot of contracts, breaking through the 20, breaking out of this range that it put in. We showed it on the Beto chart. It's here as well. I'm long this too. My stop here is under 30,000. Let's see, closed at, let me see, it closed at 31.6. My stop, no, actually my stop is 30,600. And my target can be, my actual full target where I think we can get to kind of soon is 35K. So that's kind of what I'm looking at there. I have a little Ethereum, don't like it as much, kind of more of a tag along trade. It's a quarter of the position that my Bitcoin trade is. It's very tiny. And that's just basically just for kind of, because it goes along with Bitcoin possibly. But again, that the risk in that trade is super nominal. It's pretty small.
Perfect. And one question I had for you is how you kind of combine the different timeframes you look at, the daily, hourly, and also the timeframes that you execute on. So do you kind of determine the trends on the higher timeframes and then trade with that trend, or are you?
Bingo. Bingo. So a stock that's in a downtrend, I'm not looking to buy because it looks good on the 2-day 5-minute.
Yeah.
Right. It's got to be, for me, the best trades that I make are usually above the 8 and the 20. Okay. Especially daily. Right on the daily. These are right on the daily. Now, if I'm buying them. Now, they could be down, like these stocks, these ARC stocks, these software stocks are all below their 200s and 50-day moving averages.
Right.
But for a counter trend, they're above their 8 and 20s. You know, it is sloping here, 3 days up, little rest day inside this candle. So it's still kind of, you know, hasn't violated anything yet. You got the 8 and the 20 right here. Convergence here at around, this is, we're looking at IGV. This is just an example. Not long this. ARC is probably a better choice, to be honest with you. Here, so like 42.37, 42.49 is 8. Okay. Violates that again. Maybe it's, you know, no longer to me a viable long. While it stays above these two here, path of least resistance is probably this area here, which is the last pivot, kind of the last high it made, and the 50, which is kind of right there too.
Right. Confidence.
So, right, exactly. So you have kind of a good spot where you have a target, right? So this trade here, if you were to be long it, has a lot of the ingredients that you can kind of set. Good target, good stop. Amazon, before today. Today it's a little more, probably a little more stretched, but still before today, kind of was breaking out, broke through this area right here, the last kind of intermediate high I put in, and then boom, took off. I'm very technical in my trading. I look at a lot of dailies. I kind of, it steers me in the direction that I want to trade. I do use some fundamental stuff, especially with earnings, but for the most part, I'm a momentum technical trader.
Perfect. And one thing I did want to ask you is, say you have a stock that looks good on the daily, on the hourly. What is the specific kind of price and volume action? What is the setup that you look for on the lower time frames that would get you to execute that trade?
How I built these was I made it so these tickers here, okay, give me, if they're in my ticker, all right, so this one here, let's say, this one here, if it has X amount of volume, all right, and it trades a certain amount of relative volume above that,
right,
then it's going to pop in my ticker, right? So this one here, and this one, and these get tweaked every few months. So I don't mind sharing it because chances are 3 months from now, it's going to be a different number. They have to tweak them, because if I don't, they get stale. So basically that one there is 1.1 relative volume. So if it trades over 10 million shares, right? The higher shares trade in the stock, for it to be in play, it doesn't have to have 5 times volume. If it has if Apple has 1.2, that's a big day for Apple.
Right.
Okay. Because the more volume it trades, if you trade average 50 million shares, and you're trading 75 million, that's still a big day. You know what I'm saying? You don't need, or 60 million, you don't need to have, you know, if you have a stock that has, like here, these little guys are here, right? So that one is 400,000, anything between 400,000 and 2 million, better have at least 4 times volume. So that's kind of where I find my positions, my stocks from. My filtering system kind of spits out and tells me what's got volume, because I can't follow 5,000 names, but what has volume, right? What gives me it's relative volume for today. It gives me the direction. It's ADX. I look at the price change. I look at where it's been for the last week. Let's say what trend it's in. You know, a stock that has a higher ADX with a DI and positive. I know it's been in an uptrend. I know it's a little lagging of an indicator, but it still gives me that it's in an uptrend. I look at that stuff, but volume is the most important. So for me, like today, the top of my long list was BEKE that had earnings that ended up being a pretty decent long. If you bought it this morning, could have made some money there. Another trade, Unilever, UL. If you look at UL here, Unilever had news right this morning. Stock gapped up, kind of grinded higher the whole day. This was the daily chart, broke through the 100-day moving average, right? Broke through there. Stock enormous volume for itself, averages 3.8 million, did 22 million.
Right.
Now, here's another thing though. For me, stocks that have one-day wonders like this are not good overnights usually, because the next day what happens is you come in and all the buyers that were there today, they're sleeping or they're in something else, and now you're stuck in a stock that kind of is not doing anything. So for overnights, I try to look for positions that have volume most of the time or all the time and are in trend. They need to be in trend. I do not want to take a stock overnight that's not in trend. That is disaster waiting to happen, because what happens is that if, let's say, it's in a downtrend and you get that one day when it's up, right? Use that day to sell. I mean, if you're stuck in a position, aren't you going to use that day to get out? If it's a bad position, yeah, you use it to unload. Next day you're going to come in, stock's going to be down $3 and it's never going to bounce. So for me, I look for positions like Amazon would be viable overnight if I took it overnight. Like the long, Qualcomm would be viable. Google would be viable, even though the stock is a horrible trading name. It would still, if just talking from a technically standpoint for my parameters, this would fit.
Right. Right. And say you want to execute on a stock, everything's in place. What is the specific setup that you look for on the shorter time frames to actually buy it? Is it just a break above, a downward trend line, a prior pivot, or is it a break above moving average? What's the type of setup that you like to trade on?
The best setups that I like are obviously, for me, are breakouts and breakdowns. Breaking out of a channel, breaking out, being all-time highs or all-time lows. Now shorts get a little trickier, okay? Because the markets, I mean, listen, the short side's just harder to begin with. The short side's like the long shot to track, okay? You hit it, you get paid. But most of the time, you're gonna end up losing. That's what the short side's like, unless you're in a seriously wonky tape, because the market's kind of fixed to go higher. It's just the way the dynamics are. That's why it goes up 80% of the time. Mm-hmm. So the short side, it's got, for me, I like to have a short that's weak, but not decimated into the close. You know what I'm saying? I'd rather short the next day when it has a relief rally. For the longs, though, it's different. For the longs, if they close on their highs, I like them. Right. Okay. If they break out of a channel, like let's say like I had ARK. Let's say you had like ARK was up a little bit right here. Today's the rest day. If it gaps up tomorrow, let's say it trades well tomorrow, I would take it tomorrow night. Mm-hmm. I look at stuff like that. But it's got to have volume. It can't have no volume. I don't want to take it overnight that has no volume, because I want to have real players in there. Mm-hmm. That's important.
Yeah. And this is going to be a tall ask, but
sure.
a lot of this stuff, especially for newer traders, technical analysis can be a little bit, daunting or tough to understand. So could you kind of break down kind of in the simplest form how you look at both price and volume analysis, and kind of, explain it to somebody who might just be learning about technical analysis?
Okay. So just to clarify, I am not super technician guy. Okay. Mm-hmm. I'm not the guy who's looking at, oh my God, it's got the MACDs and the less is more. And keep it simple, stupid is a really good thing to do when you're a trader. Okay. You don't need to cloud your judgment and cloud your thoughts with 1,000 different things, because all you're going to do is confuse yourself. And there's no reason to confuse yourself while you can be making money. Right. Good. So what I look at, me personally, all right, when I look at price, okay, for me, price action, again, needs to be in the direction of what the stock is doing. Since I'm a momentum trader, I want to make sure it's in the momentum that it's been going in. So it's kind of hard to find your momentum along in this tape, because everything's been down. So you're kind of right now in that kind of a counter trend rally, which is gets a little more difficult. But I will say this: if I will pull up, let's look at let's go back a few days and let's look at shorts. Okay, just so I can kind of explain, like Home Depot. Well, let me see. Lowe's, I'm going to try to find Target was a good example. So Target gap down, had horrible earnings to gap down, right? It was down a huge amount.
Right.
To me, like people be like, oh my God, it's down $50. You can't short that. Disagree. There's a reason why the stock's down $50. Okay. Facebook had the same thing when it dropped a lot. See, big drop. Look, went down further, right? Oh, look at Amazon. Went down further, right? Stocks that are down, people get scared. They think stocks are down a lot. With new traders, I'm talking about. Stocks are down a lot. I can't get involved. It's down too much. Well, first of all, I don't care where stocks are coming from. I care where they're going. Okay. And the second of all is that it's down a lot for a reason. And very rarely, it does happen, obviously, but very rarely is it wrong. Like just like the bookies in Vegas, they're wrong sometimes, but more times they're right. Okay. It's, this is the professionals. This is everybody. Sometimes, like I said, it gets out of whack, but for the most part, if it's on news, I mean, like Target, it was horrible. Mm-hmm. To me, I look at technically, that's got volume. Check. Broke down. Check. Okay. Breakdown here, technically breaking down to levels where basically hasn't seen it, I don't know how long. That's at least a year, right? Okay. So I'm looking at that. Though And then I look at the volume it's doing for the day. Well, obviously Target did enormous volume that day. It was earnings. I mean, look at it. It's 45 million. The stock averages before that day, it averaged like 5.
Right.
So, I mean, or not even 4. So that's the kind of stuff I look at. I mean, I hope that kind of answered what you were looking for.
Yeah. And we're obviously not seeing a lot of these right now, but for earnings gap ups, when you've got a news catalyst like earnings, all that, what kind of makes you get involved in that stock right at the beginning of the day? Are you looking for an opening range breakout, or do you just kind of look at that volume, see the relative volume that's way above normal, and
Yeah,
try to catch on to the ride?
that's a great question, because a lot of traders, when they first start, got to get in. I got to get in. I'm going to miss it. Got to get in. First 2 minutes of crapshoot. First 2-3 minutes, complete crapshoot. You might be right. You might be wrong. Why guess? Sure, you might miss a great trade, but let's say a stock. Let's look at let's look at CRM for the morning. Let's say CRM gaps up here. Okay. Now this looks like it actually is a mortgage play. It's bullish more, so it probably will have some buying pressure on the open. But let's say, which means it's engulfing all of today's day.
Mm-hmm.
But let's say that this stock opens here, right? Now I got to buy it. I got to get it. That's what a neophyte trader would say. For me, let it form a range first. Give it 10 or 15 minutes. Yeah, it might shoot up $4, but then it's going to dip or consolidate. Okay. And if it dips, I'm picking it up. And guess what? I have a good stop. I know where it should not trade it. If I buy it right on the open, I have no clue where this thing should go or not go. I don't know. What if it drops $4 around the first print? Then what am I going to do? I mean, maybe it's just a fake out. Maybe it's just a crazy guy selling it. Maybe it's something, who knows what it is. It doesn't give me information. You need information to make a good decision, okay? Right? You need information. You sit at a poker table with a bunch of new guys. You're not shoving your chips in, at least I'm not, the first hand without knowing what's going on. You want to kind of get a feel of what's going on. Same thing here. So for me, and again, everybody's different, but for me, and what I think works for me, and I think it works for other traders, is that you kind of wait a little bit, let it see maybe 5 minutes. You know what I'm saying? Wait till that crazy machine algorithmic, because it's all machines in the beginning anyways. I mean, there's no specialist indicating stocks like it used to be. Okay, 79, 78, 81, indication, he's taking orders. That's gone. It's all crazy machines that are doing stuff, imbalances on the open and 30, 50 different exchanges, whatever it might be. So let that kind of settle. If the trade is good, it's going to be good after 5 minutes. I promise. I give you my word. You're not missing it. You're going to get it. And you're going to get the meat of the trade. And you're going to have the information that you need to be confident in the trade that you're putting on. Very important.
So if you have a position on either long or short, what makes you close that position, exit the trade?
Hitting my target or hitting my stop.
Yeah.
That's it. Like if I put a stock trade on, it's got to hit my target. If I'm trading well. Now, listen, I'm a human being, and I'll be the first to admit it. I don't abide by, I try to abide by my rules all the time. There are times that I get emotional. Doesn't happen often, but it does happen. And usually some kind of market maneuver or something happens that will make me second guess something, which is usually ends up bad. I'm not gonna lie to you. But when I get into a trade, it either hits my target or it hits my stop. Okay. Or if it's an overnight and I only want to take it for that night, by 10:30, I'm out of the position. Or 10:45, I'm done with the position. If it doesn't reach my stop, so if I take, let's say, I'm taking Amazon tonight, but it's a strict overnight. I'm only taking it overnight. My target's this, but by 10:45, it hasn't reached my target. So I'm already putting that in stone before the trade. Like I'm already saying this is part of my parameters for this trade. Right. At 10:45, if it doesn't reach my price target and it doesn't stop me out, I'm getting out of the position. So it's got to abide by one of the rules for me, unless there is a material change in the position. For example, if I'm long Amazon and then all of a sudden news comes out, that changes it. Now it's no longer, my parameters mean nothing because there was an outlying force that changed the way the trade is supposed to act. Or if I'm long something that's a market stock like Apple, and all of a sudden, some kind of crazy happens geopolitically or in the markets, again, something has changed. So now I have to realize that it is not the same environment that it was in. But all things staying static and being in the same environment unless I get stopped out or unless I hit my target, my position is my position. And I think it's important because, one of the books I read, it was Trading the Zone, which is a great book for anybody who wants to read trading books.
Yeah.
There's a chapter that you have to accept the risk. Like when you put a trade on, you need to accept the risk. Like you said about the guy who said that, Williams, I think you said that right. Every trade was a loser. He's basically in his mind accepting the risk. The risk is this. This is X, right? I'm risking this. Okay. If I don't accept the risk as a trader, and I know many traders I've tried to help over the years that did not accept the risk. I like teaching traders. I have younger traders that I talk to, and I like helping them out because I feel like, this is something that can be taught, right? And now at the same time, you need to have some level of tolerance to be able to be a trader, but you can also learn it. But he could not accept the risk. And no matter what I told him, and no matter what rules I gave him, he could not accept the risk. If you don't accept the risk of the trade, you can't trade. You can't do it. You need to accept that. And the Williams guy, like you said, he accepts the risk by saying, okay, it's gonna be a loser, or this is what I'm risking, everything, that's that. And I think it's a great way to think. I think it's actually very important.
Yeah. That's really interesting. So a lot of traders that I know, obviously I'm more of the swing trade position trade time frame, where stocks will trend, for weeks and months ideally. They will move up their stop as as the stock forms higher lows on their time frame on the daily, and maybe they'll use a moving average as their kind of trailing stop. So it seems like once you've got a stop, that's kind of set in stone.
Right, but
That's a risk.
understand that's because their targets are further away.
Right.
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 So if I hold the stock for 2 months and I'm up $12, and then my target's 10%, whatever, 20 bucks, whatever it might be, then yeah, move the stop up. But here's an example. Let's say I'm long a stock like Apple, and my goal is to make $3, and I'm up $1.30 in it. I mean, I'm not going to move the stop up. Now, let me just clarify this. If I'm up $2.50 in it, I'm going to move my stop to break even. Okay. If it's that close, or I might even take some off. Like, I don't want to miss by 20 cents because remember, we're talking about a day trade here.
Right.
I don't want to miss by 20 cents because that's it. It's got to be up $3. But for my base case, look, I'm not getting it. Put it this way. What I meant to say is I'm not getting out of a stock if it's up 65 cents in the day because it's up 65 cents in a day.
Right.
You know what I'm saying? If it gets closer to my target, all right, I'm not going to, if I'm up 250 in a trade, I'm not going to risk the 250 plus the $2 that I was risking before. I am going to move the stop up, but it can't be up $1 then move my stop up. You know what I'm saying? Like it's got to be close to my target before I start moving. Or better yet, there are other ways I frame trades sometimes to do this. I will sell half at my target. Mm-hmm. So if it hits my target, I sell half. Let's say my target's lower. So let's say I like Apple to make $4 in Apple, right? And I say, okay, I put on 50,000 shares. Okay. Let's just say, okay, this is all arbitrary. And I say, but you know what? When it's up $2, I'm going to sell a quarter of the position. Okay. My ultimate goal is $4. When it gets up 2, I'm going to take some off. And again, has to be made before the trade is made. So these are rules that I'm putting on before the trade. I'm not doing it on the fly. This is part of my trade. Okay. Now, when it gets there, I might say, okay, I booked a quarter of that. Now I'm going to use my entry, or 10 cents under, whatever, my entry for the remainder. I'll do that as well.
Makes sense.
But right. But that's just for, I mean, it matters how wide. Yeah. I mean, if you're trying to make $1.50 at something, I mean, I'm up 50 cents. I can't sell it.
Yeah. Makes sense. And one thing I did want to touch on, and you kind of mentioned it earlier, is how many positions you'll be in at once. And also just kind of the logistics of tracking multiple positions at once as a day trader, because I can imagine it definitely gets hectic sometimes at the open, trying to watch all these different positions. So yeah, how do you kind of manage things, and how many positions do you like to have?
Okay, so for me, when I was younger, 50, 60, now 8. I mean, does it maybe because I'm older? I don't know. What I noticed is that first of all, if I have too many on, I don't manage them well. I try to take each position uniquely. Years ago, if I traded a sector, there weren't ETFs, right? So if I like the semis, I'd have 30 semis. It was different. Now you could throw an ETF on for the financials, XLF. You know what I'm saying? I mean,
Right.
whatever. Stocks, SMH for the semis. So for that aspect, usually I'll very rarely will have more than 8 positions on stocks, but I will have futures too. So I'll have futures on and I'll have stocks on, and that can get a little hectic. There's no question of that, especially if the market starts moving. But I would say 8 is the maximum I'll have on at one time. I might do, for me, if I trade anything more than 15 names in a day, I'm over trading.
Mhm.
I'm never trading 2 stocks. I'm just not. It's just the way I trade it. I mean, I have traded 4 and 5, like for the day, like only 5 names for the whole day. There are traders I know that are fantastic traders that trade 1 trade or don't even trade at all,
Right.
and that's their style, and that's awesome. Like I said, I'm more active, which is why, again, my win percentage is never going to be 90%. I mean, it just can't be. But we discussed again before how you can still make a ton of money just being 50-50. So that's really kind of what the amount of positions I'll have. Maybe 8 maximum. Normally I have about 5 on at any given time if I'm somewhat active, 5 or 6. Usually futures, maybe 1 future matters, but that ultimately it's kind of not the same because they kind of move on their own anyways. They kind of do their own thing.
Right.
So
Yeah, perfect. And kind of a related question, what's kind of your set position size for a position, or does it depend on the risk that you're taking on, where your stop loss, where all that's going to be?
depends on risk. So everything is, in theory, again, 99% of the time I do this, 1% of the time I do not, which is, again, I'm being completely transparent with you. I make mistakes, but in theory, how it should be is that my share size is directly correlated to the price of the stock, how much I'm risking to lose, and my stop out.
Hmm.
That's what I come across to my sizing. If I want to risk 50K per trade, and I have risking $2 an Apple, I'm buying 25,000 shares.
Right.
There's my 50,000. It's not hard. It's not calculus. It's pretty easy arithmetic. Keeps my each trade the same amount, which I think is kind of important. There are other people that don't. They think that they should be A trades and B trades. I think it's nonsense. Every trade should be an A trade. What's a B trade? A trade you don't like as much as that trade? That's crazy. Then don't put it on. The only trade you should be putting on is the one you like the best. Those are the trades. I like these names. They are the best. I'm trading them. They're all A's.
Hmm.
And again, I find myself putting on C trades too. I got to preface. This is you're constantly fighting with yourself to make sure you follow your own rules. It's a constant daily gig. That's what you got to do.
Perfect. John, thank you so much for walking us through your system and sharing your thoughts with us. I always like to end it with kind of one last question. What general advice do you have for new traders out there just getting started, who maybe this is their first, large correction that they're going through and they're struggling a little bit? So maybe throw some mindset in there. But what kind of general advice do you have for new traders?
Well, I think you got to be patient. I think you're starting off, you want to make money right away. You want to get in the throes of it. You got to learn. Pay your dues. Take your time. In my opinion, and again, maybe I'm old school, but 2 to 3 years minimum before you start really knowing what you're even doing. You could get lucky before that. But for the most part, you're going to be learning your whole life, your whole career as a trader. It's not easy. If it was, I'm sure that everybody would do it. It is very taxing. It is very stressful, but it's also very rewarding. And you put the work in hard, then you will definitely see results. But you got to be patient. You got to give yourself a chance to learn and listen. Listen as much as you can. Listen to other traders, successful people. Pick their brains. Ask them questions. Okay. And if you don't have anybody to ask, then trial by error, I would say, as crazy as it sounds, but you have to somehow find a way to learn what works and what doesn't, and document everything in the beginning. Make sure you have those post-it notes, your journal, everything, so you can go back and look, because it's a lot of information, it's a lot of things to take in, and it's going to be overwhelming in the beginning. There's no question about it.
Perfect. And you mentioned trading in the zone. a few minutes ago. Are there any other books that you'd recommend new traders,
I think
read
that
through?
book's the Inner Game of Trading. I read when I was younger. Pretty good. But Trading the Zone, I think, is because I'm such a big psychology guy.
Right.
I really believe that there are 1,000 ways. I know so many traders that trade so different from me and different from each other, but they're profitable because they all follow the same kind of psychological risk profile that they need to have. That's the only constant. Everything else, I mean, like you said, I'm the only really day trader guy that you've interviewed, maybe. But the truth is that success has nothing to do with my style. Success has everything to do with how I execute that style. And that is the important thing that a new trader's got to know. Learn from somebody and put your own special seasoning on it. What fits for you, so the peg actually fits in the hole. And I think those traders that do that, those are the ones that go on to have long, very successful careers.
Perfect, John. Thank you so much for sharing your time with us and your experience. I really appreciate it. And to everybody watching, I hope you did as well. Leave a like down below if you did, and subscribe if you're new to the channel. And we'll see you guys in future videos. Thanks.
Thank you, Richard. I enjoyed it very much. Thanks, guys.